Everyone tells you the same thing. When everything collapses, buy silver. Wars, recessions, bank failures, silver is supposed to protect you. But here's the uncomfortable truth. History doesn't support that belief. In fact, during some of the worst financial collapses ever recorded, silver didn't save people at all. Sometimes it didn't move. Sometimes it crashed. And once you understand why, you'll never look at silver the same way again. This video isn't anti-silver, it's anti-myth. And history is about to prove it. Silver has one of the strongest reputations in financial history. For centuries, it has been associated with money, stability, and protection. Coins were made from it, empires traded with it. So when modern investors hear the word crisis, silver immediately comes to mind. This belief didn't come from nowhere. Gold and silver are often grouped together as hard money. They aren't printed. They can't be created digitally. They exist outside the banking system. So the logic feels simple. If paper money fails, silver should rise. But history is rarely that simple. The mistake most investors make is assuming silver behaves like gold. It doesn't. Gold is primarily a monetary asset. Silver is something very different. Silver lives in two worlds at the same time. On one side, it acts like money. On the other, it acts like an industrial commodity. And that second role changes everything. More than half of global silver demand comes from industry: electronics, solar panels, medical equipment, automobiles, and manufacturing. This means silver's price is deeply connected to economic activity. Here's the problem. Most financial crises don't start with inflation or currency collapse. They start with economic contraction. Factories slow down, consumers stop spending, credit tightens, production falls. When that happens, industrial demand for silver drops, sometimes violently. So while fear is rising in markets, silver often faces downward pressure, not upward momentum. This is why history keeps producing moments that shock silver investors. During recessions, silver often behaves less like a safe haven and more like a risk asset. And this creates a dangerous psychological trap. People buy silver expecting protection at the exact moment when silver is most vulnerable. They're not wrong to want safety. They're wrong about where silver fits in the timeline of a crisis. Silver doesn't usually lead during chaos. It often lags. It waits. And many investors don't have the patience or the understanding to survive that phase. This misunderstanding has repeated itself again and again across decades. Different countries, different crises, same result. The myth survives because people remember the end of the story, when silver eventually rises, but they forget the painful middle. And that middle is where most investors lose money. Before silver can protect you, it often punishes you first. And once you see that pattern clearly, the next question becomes unavoidable. If silver isn't reliable at the start of a crisis, when does it actually work? To understand silver's real behavior, we don't need opinions. We need history. Let's start with the crisis everyone knows. The Great Depression, 1929. When the U.S. stock market collapsed in 1929, panic spread across the world. Banks failed, businesses shut down, unemployment exploded. If silver were a perfect crisis asset, this should have been its moment. But it wasn't. In the early years of the Great Depression, silver prices stayed weak and unstable. Why? Because industrial demand collapsed. Factories weren't producing. Trade slowed. Consumption fell. Silver didn't rise with fear. It moved with the economy. People who bought silver expecting immediate protection waited years before seeing any meaningful recovery. The crisis punished impatience. The 1970s inflation myth now jumped to the 1970s. This is the era most silver believers point to. High inflation, oil shocks, dollar weakness. Yes, silver eventually exploded upward. But here's what's usually ignored. Silver didn't rise because of crisis alone. It rose after monetary conditions changed and speculation entered the market aggressively. The move wasn't smooth. Silver was extremely volatile. Massive drops, sharp spikes. Many investors bought near peaks and suffered brutal losses afterward. The lesson isn't that silver always wins in crises. The lesson is that timing matters more than belief. The 2008 financial crisis. This one surprises most people. When the global financial system nearly collapsed in 2008, silver didn't protect investors. It crashed. Between early 2008 and late 2008, silver lost more than 50% of its value. Think about that. At the exact moment banks were failing, silver collapsed alongside stocks. Why? Because liquidity disappeared. When fear peaks, investors don't buy silver. They sell everything to raise cash. Silver is liquid. Silver is tradable. So silver gets sold. Safe haven assets don't always rise first. They often fall first. Silver recovered later, yes, but only after central banks flooded the system with money. Again, silver rewarded patience, not panic buying. The COVID shock, 2020. One more example. In March 2020, global markets froze, stocks crashed, oil collapsed. Fear was everywhere. Silver? It dropped nearly 40% in days. Only later, after stimulus, money printing, and recovery expectations, did silver surge. The pattern repeated perfectly. Initial shock to silver falls, monetary response to silver rises. Not protection first, response later. Across crises, silver behaves the same way. It falls during liquidity shocks. It struggles during economic contraction. It rises after monetary expansion. Begins. This doesn't make silver bad. It makes silver misunderstood. And misunderstanding is far more dangerous than volatility, because investors buy silver expecting it to act like gold, and it simply doesn't. Now the question becomes critical. If silver fails when fear hits first, what role is silver actually meant to play? And more importantly, why does silver eventually explode upward after most crises, but only after people give up on it? To really understand silver, you need to stop asking whether it's safe and start asking what kind of asset it actually is. Because silver lives in two worlds at once, and that dual nature is exactly why it behaves so differently in crises. Silver is money. But not only money. Historically, silver was money. For thousands of years, it was used as currency across empires. But the modern world changed that. Today, silver is only partly a monetary metal. The rest of it, it's industrial. Silver is used in electronics, solar panels, medical equipment, batteries, military technology. That means silver's price depends on economic activity, not just fear. Gold rises when people fear collapse. Silver rises when economies recover, industry expands, money supply increases. That difference matters. A lot. Why this changes everything in a crisis. When a crisis begins, two things usually happen immediately. Economic activity slows, liquidity disappears, factories stop, orders get canceled, industrial demand drops. That's bad for silver. So during the first phase of a crisis, silver behaves like an industrial metal, not a safe haven. This is why silver often falls when fear is highest. Gold doesn't have this problem. Gold isn't tied to production cycles. Silver is. Then comes the second phase. After the initial shock, governments panic. This is where silver's personality changes. Central banks cut interest rates, governments print money, stimulus floods the system. Now two things reverse. Liquidity returns. Inflation expectations rise. Suddenly, silver's monetary side wakes up. Industrial demand slowly recovers. Currency confidence weakens. Speculation enters. This is when silver explodes upward, not during collapse. After intervention. Silver is a timing asset, not a panic asset. This is the mistake most investors make. They buy silver. During fear, during headlines, during panic, but silver rewards positioning, not emotion. Historically, silver performs best when inflation expectations rise, interest rates stay below inflation, industrial recovery begins, money supply expands faster than growth. That's a very specific window. Miss the window, and silver disappoints. Hit the window, and silver can outperform almost everything. Why this misunderstanding is dangerous. People buy silver thinking. Crisis equals silver goes up. When that doesn't happen, they panic sell, often at the worst possible moment. Silver punishes impatience. It always has. It's not a shield against chaos. It's a lever on policy response. The real question. Now, so here's the uncomfortable truth. Silver doesn't protect you from collapse. It rewards you for understanding what comes after collapse. Which leads to the most important question of all. Are we entering a phase where silver finally benefits? Or are we still in the phase where it disappoints? Now that we understand how silver behaves in history, we need to answer the question that actually matters. Where are we right now in the cycle? Because silver is not about belief, it's about timing. And timing depends on policy, debt, and inflation pressure. The world is trapped between two bad choices. Today's global system is under stress, especially in the United States. Debt levels are historic. Interest payments are exploding. Governments need growth, but growth is slowing. This creates a trap. If central banks raise rates, debt becomes unmanageable. If they cut rates, inflation resurfaces. There is no clean solution. And this is exactly the environment where silver becomes confusing. Why silver hasn't worked. Yet many people expected silver to rise sharply already. But it hasn't. Why? Because we are still in the tightening phase, not the rescue phase. Right now, interest rates are still relatively high. Liquidity is controlled. Credit is expensive. Industrial demand is uneven. This suppresses silver. Gold can rise in this phase. Silver usually cannot. Silver needs policy surrender, not policy discipline, and that surrender hasn't fully happened yet. The key signal people. Miss Silver doesn't move when inflation exists. It moves when inflation becomes politically unacceptable. That moment comes when unemployment rises, debt servicing crowds outspending, markets threaten instability, governments choose survival over credibility. That's when central banks change behavior, not slowly, abruptly, and silver responds violently to that shift. Why the next move matters, more than the last 10 years. The mistake is looking backward. People say, silver hasn't protected me so far. But silver doesn't protect you during control. It protects you when control breaks. History shows that when governments stop fighting inflation, stop defending currencies aggressively, start prioritizing debt stability, silver enters its strongest phase. That phase doesn't last forever, but when it arrives, it moves fast. Silver is not about certainty. It's about asymmetry. This is why silver attracts serious capital quietly. Silver doesn't need to be right 100% of the time. It only needs one policy reversal, one liquidity flood, one inflation miscalculation. The upside is asymmetric. The downside is frustrating but limited. This is why silver is never obvious before it moves. It only becomes obvious after. The mistake investors are making right now, people are asking, is silver safe? That's the wrong question. The real question is, what happens to silver if policymakers lose control, even briefly? Because that scenario is becoming more likely, not less. And once that happens, silver doesn't slowly grind higher. It reprices. What comes next? So now we're ready for the final question. If silver isn't a crisis asset, and it isn't a stable asset, then what is it actually for? And how should someone think about silver without repeating the historical mistakes? Now we can finally say this clearly. Silver is not a safe asset. Silver is a conditional asset. And once you understand that difference, everything about silver makes sense. Silver's real role, and why most people misuse it, gold is about preserving wealth. Silver is about transition. It performs best when the system is moving from discipline to rescue, tightening to easing, credibility to compromise. Silver doesn't protect you from normal inflation. It protects you during policy mistakes. That's why people get confused. They buy silver expecting stability and instead they get volatility. But volatility is the feature, not the flaw. Why silver always disappoints. First, silver always tests patience before it rewards conviction. History shows the same pattern again and again. Central banks tighten, markets struggle, silver stays weak, confidence cracks, policy reverses, liquidity floods, silver explodes. Most people quit at step 3 or 4. They sell silver right before the reason for owning it appears. That's why silver feels unreliable to most investors, not because it fails, but because it works late. The mistake governments. Keep making governments always promise, we'll control inflation, but when faced with debt overload, unemployment risk, political instability, they choose survival every time. This isn't corruption, it's mathematics, and silver responds to that choice, not immediately, but decisively. When silver actually belongs in a portfolio. Silver is not for short-term traders, people seeking calm, anyone who panics during drawdowns. Silver is for asymmetric protection, a policy failure, hedging, long-term positioning against monetary mistakes. It's not about prediction, it's about preparedness. The mental shift that changes everything. Stop asking, is silver safe? Start asking, what happens to silver if policymakers are forced to choose between inflation and collapse? That's the only question that matters, because history already answered it. What comes next without making predictions? We don't need to predict dates. We only need to watch signals. Rate cuts under stress, debt monetization, emergency liquidity programs, political pressure on central banks. Silver doesn't move on news. It moves on loss of control. And control is always lost faster than people expect. Final truth. Silver will never behave the way people want, but it has always behaved the way history says it will. Those who understand that don't chase silver. They wait with it. If this helped you see silver differently, not as hype, not as fear, but as structure, subscribe to the channel.